Ever get the feeling that the economy is kind of like a giant Jenga tower,
Yeah.
and someone keeps pulling out these risky blocks,
Oh, yeah, I know what you
and you're
mean.
just waiting for the whole thing to wobble?
Yeah,
Well, today we're going to look at one of those potentially wobbly blocks that's super relevant for UPSC aspirants out there.
definitely.
We're diving deep into the world of NBFCs.
Non-banking financial
Oh,
companies.
lax.
Yeah.
These are major players in India's financial system, lending money, fueling growth. But what happens if those loans get a little shaky?
Right. Well, the IMF just released this report, and it's like a financial health checkup for India's
Oh,
NBFCs.
interesting.
And this is crucial stuff for both prelims and mains.
So it's like we're getting a sneak peek at potential problems before they hit the headlines.
Precisely. And that's why this deep dive is so important. It's about understanding those vulnerabilities and the bigger picture of how this whole system works.
Okay, so let's get into the juicy stuff.
Yeah.
What did the IMF find?
Well, one thing that really jumps out is the NBFCs, they have this huge appetite for lending to the power sector.
The power sector.
Yeah, but the power sector itself has been facing its own struggles for years.
It's like a power-hungry phone with a bad battery, right?
Exactly.
Yeah.
Constantly draining no matter how much you charge it.
So what happens when those loans, those massive investments in the power sector, they start going sour?
That's the big question, and it's a major concern because, unlike banks, NBFCs don't have the same level of regulatory oversight or safety nets.
So they're kind of operating with a little less of a safety net?
Exactly. So if these power sector loans start failing, it's not just going to stay isolated, you know?
So there could be a domino effect.
Absolutely. It could ripple out and affect banks' financial markets, even your own investments.
That's a bit scary.
It is, and we've seen it happen before. Remember the ILNFS and DHFL crises?
Oh yeah, those were some pretty big wake-up calls.
They were real-world examples of how NBFC troubles can snowball and really send shockwaves through the whole system.
Definitely a topic that frequently pops up in UPSC mains exams.
Absolutely.
So the IMF is basically saying, hey, these vulnerabilities haven't vanished.
Right, and another point that really stood out in the report was how much NBFCs depend on market borrowing to finance their lending.
Oh, interesting.
It's almost like they're constantly juggling funds, relying on sources that can be pretty unpredictable.
So not exactly the most stable foundation.
Not really, and that's a major concern because if those funding sources dry up, suddenly it could leave NBFCs in a very precarious position.
I see.
So the IMF is really stressing the importance of stronger liquidity rules, making sure these institutions have enough readily available cash to meet their obligations even when things get tough.
That's all about building that resilience into the system.
Exactly, and that's key.
Okay, but here's something that I found kind of alarming. The report said that a huge chunk, like 63% of those power sector loans, are held by just 3 major NBFCs.
Yeah, that's a lot of eggs in one basket.
Definitely makes you think about what could happen if one of them stumbles.
Exactly. It raises concerns about concentration risk.
And the potential for wider impact if one of those big players faces difficulties.
Definitely. Diversification is key, both for individual investors and for the stability of the whole system.
A principle that applies across the board.
Absolutely. And it's something that all UPSC aspirants should keep in mind.
Definitely. And speaking of risks, the report also highlighted some regulatory gaps surrounding NBFCs, particularly those owned by the government.
Right.
So is it really a level playing field if certain players are subject to different rules?
That's a great question, and it's a key point of contention. The IMF is advocating for a level playing field for all NBFCs.
So everyone plays by the same rules.
Exactly. Regardless of ownership, it's about fairness, promoting healthy competition, and preventing any single entity from becoming too big to fail.
Too big to fail. That's a concept we hear a lot these days.
It is, and it's a crucial one to understand, especially for those tackling economics in the UPSC.
So creating a more balanced and transparent system where everyone is held to the same standards.
That's the goal. And, we can't forget about that 56% of NBFC lending that's financed through those volatile market instruments we talked about earlier.
Right, those unpredictable funding sources.
Yeah, exactly. It just adds another layer of vulnerability to the whole mix.
So it's like they're building a house on shifting sand, right?
Yeah, that's a good way to put it.
So what does the IMF recommend? What's their prescription for a healthier, more stable financial system?
Well, they lay out a series of recommendations, kind of like a doctor would prescribe a course of treatment.
Okay, so what's the first step on the IMF's prescription pad?
First, they emphasize the need for stronger liquidity rules,
Oh, okay.
making sure that NBFCs have enough cash on hand.
So they're not scrambling when things get rough?
Exactly. It's about having that buffer to meet their obligations, even when faced with unexpected challenges.
Makes sense. What else is on the list?
Well, they also advocate for regulatory parity.
Regulatory parity.
Yeah, making sure that all NBFCs operate under the same set of rules regardless of ownership.
So no special treatment for anyone.
Exactly. It's about promoting fair competition and preventing any single entity from becoming too big to fail.
A concept we hear a lot about in economics.
Definitely, and one that's especially relevant for UPSC aspirants.
Right. So it's about establishing a clear and consistent rule book.
Yeah.
But how do we make sure these rules are actually followed and that potential risks are identified early on?
That's where enhanced data sharing and risk monitoring come in.
Oh, okay. So more transparency.
Exactly. The IMF recommends improving data collection and analysis so regulators can have a clearer view of the financial landscape.
It's like having a financial weather forecast that can predict storms before they hit.
Yeah, that's a good analogy. It's about having that early warning system to identify potential problems before they become full-blown crises.
That makes a lot of sense. But what about addressing that over-reliance on those unpredictable market instruments?
Well, the IMF suggests that NBFCs need to diversify their funding sources.
Oh, so not putting all their eggs in one basket.
It's exactly reducing their dependence on those volatile instruments and creating a more stable foundation for their lending activities.
So spreading the risk, making the system more resilient.
Yeah, right. And that's a key principle in financial management, you know.
It
This
is.
portfolio diversification, it applies to both individual investors and the macro level dynamics of the financial sector.
And it's something that comes up a lot in the UPSC exam.
Definitely.
But here's the big question. Can India actually implement all these recommendations, especially considering how important NBFCs are for economic growth?
That's the challenge, and it brings us to a really crucial point. The IMF highlighted the need to balance financial stability with developmental goals.
Right.
India's been using NBFCs to promote financial inclusion, you know?
Reaching those underserved populations.
Exactly, extending credit to small businesses and individuals who might not have access to traditional banking services.
It's a critical part of the country's economic strategy.
Absolutely.
So it's a delicate balancing act.
Yeah.
You want a robust and stable financial system, but you don't want to stifle economic growth or limit access to credit for those who need it most.
It's like walking a tightrope.
It really is.
And the IMF is urging India to carefully consider these trade-offs as it navigates this complex landscape.
So it's not about abandoning developmental goals,
No, not at all.
but finding a sustainable path that promotes both growth and stability.
Exactly. It's a nuanced discussion, and it's one that frequently comes up in UPSC mains exams, you know,
Right.
where you're expected to analyze complex economic policies and understand the trade-offs involved.
It's not a black and white situation.
Definitely not. It requires a thoughtful and strategic approach.
So what about the role of technology? India's been making huge strides in digital finance with UPI and mobile banking.
Oh, absolutely. Technology has the potential to be a game changer, both in terms of expanding financial inclusion and improving risk management.
In what way?
Well, think about it. With better data and analytics, lenders can assess creditworthiness more accurately.
So potentially reducing the risk of defaults.
Exactly. And digital platforms can help reach those underserved populations that have been excluded from the formal financial system.
So it's not just about regulations and oversight. It's about leveraging innovation to create a more resilient and inclusive system.
Precisely.
That sounds pretty promising.
It is. But technology also comes with its own set of challenges. You know,
Yours.
cybersecurity risks data privacy, concerns the digital divide, especially in rural areas with limited internet access.
Right.
These are all issues that need to be addressed.
It seems like there's no easy fix, no silver bullet.
There isn't. It's
Yeah.
about navigating a complex landscape with multiple factors at play.
So many moving parts.
Exactly, and that's why it's crucial to have a deep understanding of these complexities, not just for those preparing for the UPSC exam, but for anyone who wants to understand how our financial system works and how it impacts our lives.
Okay, I'm starting to see the bigger picture here. It's not just about numbers and regulations. It's about finding that balance, ensuring a healthy and inclusive financial system that can support sustainable growth.
You got it. And remember, the IMF report is just one perspective in this ongoing discussion.
Right.
It's important to consider different viewpoints, analyze the situation from different angles, and form your own well-informed opinions.
That's what critical thinking is all about.
Exactly. And it's a skill that will serve you well both in your UPSC exams and in life.
Absolutely.
Okay.
So as we wrap up this part of our deep dive, what's the one key takeaway you want our listeners to remember, especially those UPSC aspirants?
I'd say this India's financial system is at a pivotal point.
Okay.
There are challenges ahead, but also immense opportunities. The decisions made today will have a lasting impact on the country's economic trajectory.
So understanding these challenges, the trade-offs, the potential solutions, that's crucial.
Absolutely. It's not just about acing an exam. It's about equipping yourself with the knowledge and critical thinking skills to understand and contribute to the world around you.
Okay, so we've talked about the risks, the potential solutions, but what's next for India's NBFCs? Where do we go from here?
Well, the IMF report, it's like a roadmap. It highlights the challenges, but it also points towards some possible directions.
A roadmap, but not a set route.
Exactly. The path India ultimately chooses, well, that's up to policymakers, the regulators, the industry itself.
So there's still a lot of room for things to change.
Absolutely. And that's what makes this so interesting. We're at a pivotal moment.
So it's like a choose-your-own-adventure story for India's economy,
I like that analogy.
but with some pretty high stakes.
Oh, definitely. The decisions made now will have a ripple effect for years to come.
No pressure, right?
Right. But that's why understanding these issues is so important, especially for those UPSC aspirants out there.
Absolutely. And speaking of those big decisions, what are some of the key factors that are going to shape this journey for India's NBFCs?
Well, I think one of the most crucial factors is how effectively India can balance financial stability with its developmental goals.
Right, we talked about that tightrope walk.
Exactly. It's a classic dilemma. You want a system that's strong enough to weather any storm, but also flexible enough to promote growth and inclusion.
Finding that sweet spot.
Yeah, that's the key, and it's not easy.
Not at all. But what about the role of technology? India's been leading the way in digital finance with things like UPI and mobile banking. Could tech be a game changer here?
No, absolutely. Technology has the potential to completely revolutionize both financial inclusion and risk management.
How so?
Well, think about it. With better data and analytics, lenders can make much smarter decisions about who to lend to.
So less chance of those loans going bad.
Precisely. And then you have digital platforms that can reach people and businesses that traditional banks haven't been able to serve.
Expanding access to financial services.
Exactly. It's really exciting to think about the possibilities.
So it's not just about tightening regulations, it's about using innovation to build a better system.
A more resilient and inclusive system.
That sounds pretty optimistic.
Yeah, it is, but like any powerful tool, technology comes with its own challenges.
Of course, what kinds of challenges?
Well, cybersecurity threats are a big one. Data privacy is another. And then there's the issue of bridging the digital divide.
Especially in those rural areas with limited internet access.
Exactly. And these are all things that policymakers need to address.
Right. It's not a quick fix.
No, it's not a magic bullet. There's no one-size-fits-all solution.
So many complexities to consider.
Definitely. But I think India has a real opportunity to navigate these challenges and build a financial system that's both stronger and more inclusive.
It's all about finding the right balance.
It is, and that's where these insights from the IMF report become so valuable. It provides a framework for understanding the issues, the potential solutions, the trade-offs involved.
A framework for making those tough decisions.
Exactly, and that's why this kind of deep dive is so helpful for UPSC aspirants. It helps you develop that critical thinking.
And craft those well-informed answers.
Precisely showing that you really understand the complexities of India's economic landscape.
And for our listeners who aren't studying for the UPSC, this stuff is still really important.
Oh, definitely. We all participate in the economy, whether we realize it or not.
It affects all of us.
It does. And the more informed we are about these issues, the better equipped we are to make smart financial decisions and just understand the world around us.
So to wrap things up, what's the key message you want our listeners to take away from this deep dive?
I'd say it's this. India's financial system is at a crossroads. The choices made today will have a huge impact on the country's future. And understanding those choices, the potential risks and rewards, well, that's what empowers us to engage in these conversations and contribute to building a better future.
Absolutely well said. And on that note, we want to thank you all for joining us on this deep dive into India's NBFC sector. We hope you found it informative and insightful and maybe even a little bit thought-provoking. Don't forget to like, subscribe, and leave a comment below with any questions or any of the topics you'd like us to cover.
And for all those UPSC aspirants out there, keep diving deeper, explore different perspectives, and form your own well-informed opinions. The more you engage with these issues, the better prepared you'll be for those exams.
And remember, knowledge is power.
Yeah.
So stay curious, stay informed, and be sure to check out the original article in TH where we got all this great information. Till next time, keep diving deep.